So given the recent volatility in the tech sector, I wanted to do a video on some of the stocks that I've been looking at, some that have been flying pretty high, one of which I've been holding, which is AMD. I've been holding AMD for a good bit of time, since about the $50 price, and then one that I'm looking to add, which is Netflix. So just want to take a look at the QQQ on TradingView really quick to get a sense of where we're at and where we've come from. If we're looking at the NASDAQ from the March lows, we've come up 84%. So quite a rally from those lows. And then on Thursday, we saw some volatility that started. 2-day drop so far that went all the way down to about 10% from the peak and ended up right at about 6.5%. So typically before I add any large positions, I want to make sure that the overall market is moving in the right direction. So what I'll do is I'll switch my screen over to the Heikin-Ashi candles. And what that does is it kind of gives me a sense of when the downward momentum might be over. So right now we still haven't got a confirmation in the other direction. So I might rebalance some positions and add a little bit here or there, but I won't make any of my large buys until we start to see at least a break in this downward trend. I'm going to be taking a look at two stocks today, AMD and Netflix, and we're going to be doing the value investing aggregate score analysis that I've done in some of my other videos on different industries and different stocks. So what we're going to be doing is looking at the dividend yield, the overall earnings growth, the projected earnings growth, as well as the relative valuation based on where this stock is traded historically in terms of its price to earnings ratio. So we'll start by talking about AMD, and AMD is a stock that I've been in and out of before. This most recent time I got in around May of this year, somewhere in the $50 range. And I've been holding on to the stock. I did trim my position down a little bit recently as we've gotten over 80. And I started to bring that down a little bit smaller allocation than I had it before. And now, given this correction, I'm trying to consider whether or not I want to continue holding or if I want to add or sell. So AMD manufactures microprocessors and motherboards and graphics cards. So they have a bunch of products, hardware products that are involved in computer processing. They're known as an innovation leader in this industry, and they compete with the likes of Intel and NVIDIA. They've actually gained a lot of market share from Intel over the recent years. But we'll see in their earnings history that it took them quite some time to be profitable. So jumping over to fast graphs to take a look at AMD, you can see that over the course of their lifetime, AMD has not been profitable for several of its years. So if there's no orange line or blue line here in one of these years, that means that they did not make any money. So if I set the graph from 2000 to 2010, you can see that their adjusted earnings growth rate was actually negative 14.5%, and they traded on average at a 37 PE. So AMD was a pretty terrible investment from 2000 to 2010. If we fast forward to the time period of 2010 to the present, we're looking at a earnings growth rate of 8.42%, and the stock's traded around a 40.45 PE. So if we jump to the 5-year time frame that I used to compare several stocks across the board in my other videos, let's take a look at where AMD is at today. So adjusted earnings growth rate is off the charts, 64%. We've been trading on average at a 57.42 PE, and we're sitting at an 86. So we're definitely overvalued. But if AMD is able to keep up this earnings growth, then this actually isn't too terrible of a stock to be in right now. So although AMD is looking a little extended, if we take this earnings growth rate and we apply the 57 PE ratio to get a target price for 2021, we're getting 93.59, and then we're getting 117.13 for 2022. Now, we can't necessarily just take these target prices and say that that's going to be our returns, but this does give us an idea of what kind of position we're in terms of historical relative valuation. And basically what we want to do is give ourselves the best shot at a high return by using the valuation and the projected earnings. So if we jump over to the aggregate scoring for AMD, our earnings yield of 64% and our overvalue giving us a negative 33%, is going to give us the aggregate score of 30%. So actually a pretty decent score. If this stock were to come down in price, I'd definitely consider adding more to my current position, and this score here gives me good peace of mind to continue holding. So that brings us to the second stock in the video, which is Netflix. And Netflix is a streaming services provider for movies and other types of video. They are the market leader right now, but they have recently come under a lot more competition as a lot of players have tried to enter the streaming space. In addition to their streaming products, they also have very personalized content. So they have a lot of data on their users and as well as the videos, and they're able to know what user preferences are, how successful videos can be. So a huge asset that they have is also all of this data. So taking a look at Netflix on fast graphs, you can see that they're another one that has exploded in the recent years as part of a lot of the FANG stocks over the last 10 years or so. So they're trading at a 93 PE today, and all time since Netflix has been profitable, it's been trading at 104 times. So it's maintained a really high multiple over its time. So according to that, even on the 5-year time frame, if we look at this, we can see that they've traded at a 110. So right now they're trading at a 93, which PE of 93 is still pretty rich. But they have an earnings growth of 57.69% on the 5-year time frame, given the 3-year historical and the 2-year forecasted. So just really phenomenal earnings. And if the market continues to pay over 100 PE for this stock, this could actually be somewhat undervalued. So I'm still skeptical of the high PE, but I went ahead and actually added a position on Netflix on Friday, and just a small position, and we'll continue to add if that price comes down. So taking a look at the aggregate scoring for Netflix, you can see that based on this 110 PE, we get a positive undervalue, which is pretty remarkable at 110 PE. So I'm a little bit skeptical of that and still want to apply a little bit of judgment there, but that is what the market has traded for this. And then at 57.69% adjusted operating earnings, that gives us one of the highest scores I've found right now on a stock doing this type of analysis. So just to summarize the actions that I'm taking based on this information for my position in AMD, I'm going to continue to hold, even though the price has gone up quite a bit, and I'm up quite a bit on that position. And I'm also looking to add to that position if the price continues to come down. For Netflix, I'm going to start to acquire a position in this stock, right now keeping it relatively small. And if the valuation continues to come down and the earnings stays the way that it is, then I'll continue to add. Thanks for watching, and if you like this content, be sure to subscribe to the channel and check out my other videos on finance and music.